PFE just formed a real bottom, and the data is telling us something most retail investors are completely missing right now. Pfizer has been one of the most beaten down names in the market over the past 2 years, but something quietly shifted. The composite score just came in at positive 35, which crosses our threshold for a confirmed bottom signal. Here is why I called it that. Let us start with the moving averages, because they tell us the story of where price has been and where it is trying to go. The 20-day EMA sits at 27.22, the 50-day EMA is at 26.83, and the 200-day SMA is all the way down at 25.42. Price right now is at 28.08, which means PFE is trading above all three of those key averages. Think of moving averages like layers of a foundation. The 200-day is the bedrock, the 50-day is the floor, and the 20-day is the ceiling that just got broken through. When price climbs above all three, it signals that the longer-term trend is beginning to shift from bearish to bullish. Now here's where it gets interesting. The fact that price reclaimed all three levels in sequence suggests this is not just a random bounce. This is a structured move higher. Now let us talk momentum, because this is where the bulls really have something to work with. RSI, which measures how overbought or oversold a stock is on a scale of 0 to 100, is sitting at 61. That is solidly in bullish territory without being dangerously overbought. The sweet spot for a healthy uptrend is between 50 and 70, and PFE is right in that zone. The MACD is showing an improving signal, which means the short-term momentum is accelerating faster than the longer-term trend. That is a classic sign of building buying pressure. The ADX, which measures the strength of a trend regardless of direction, is at 15.6. That is on the lower end, which tells us the trend is still early and has plenty of room to develop before it gets exhausted. Volume is where we figure out if real money is behind this move or if it is just retail noise. The volume pattern here is showing accumulation, which means more shares are being bought than sold on a consistent basis. The money flow index, which combines price and volume to show where capital is actually moving, is at 44.4. That reading tells us there is room for more inflows before this gets crowded. Smart money tends to accumulate quietly before a move, and that is exactly what this pattern looks like. The price pattern detected here is a double bottom, which is one of the most reliable reversal signals in technical analysis. Think of it like a ball bouncing off the same floor twice. The second time it holds, the market is telling you that sellers have run out of ammunition at that level. On top of that, we have a bullish fair value gap, which is a concept from institutional trading that identifies price zones where big buyers stepped in aggressively. When price comes back to fill those gaps and holds, it confirms that the demand is real. From a market structure standpoint, PFE is showing a bullish break of structure, which is the technical term for when price makes a higher high after a series of lower highs. That is the moment when the trend officially flips. The bullish fair value gap signal reinforces this, pointing to zones where institutional buyers have already shown their hand. There are no order blocks immediately nearby, which actually means price has cleaner room to move without hitting major institutional resistance zones overhead. Key levels to watch on the downside are 27.62, then 26.58, and finally 25.59. That first level at 27.62 is your nearest safety net, sitting just below current price. On the upside, the data shows no major resistance levels identified above current price, which is actually a bullish sign because it means there is open air above for this stock to move into. So here is the bottom line on PFE. This is a confirmed bottom signal, and here are the 5 reasons why. First, price is above the 20, 50, and 200-day moving averages, showing a full trend reclaim. Second, the double bottom pattern printed at a key support zone. Third, volume accumulation confirms buyers are stepping in with size. Fourth, the MACD is improving and RSI is in healthy bullish territory. Fifth, the market structure flipped bullish with a break of structure. The composite score of positive 35 puts this firmly in bottom signal territory, not a trap. For the bullish case to play out, you want to see PFE hold above that 27.62 support level on any pullbacks. If it does that and continues to build momentum, the next target zone is a retest of prior resistance levels in the $30 to $31 range. A rising ADX above 20 would confirm the trend is gaining real strength. The thesis breaks if PFE loses that 27.62 level on a closing basis. A close below there opens the door to 26.58, and below that you are looking at 25.59 as the next major support. Also watch the Z-score, which is currently elevated at 2.34, meaning price has moved significantly from its mean. If momentum fades quickly from here, a mean reversion pullback is a real risk. 3 takeaways from today. 1. PFE has reclaimed all major moving averages and printed a double bottom, which is a textbook reversal setup. 2. Volume accumulation and improving MACD confirm buyers are in control right now. 3. The composite score of positive 35 gives us a confirmed bottom signal, but watch that 27.62 level closely as your line in the sand. That is today's Dip Detective deep dive for PFE. Subscribe for more bottom or trap breakdowns every week, not financial advice.